Hello, everyone. Good afternoon, good evening from different parts of Asia. Welcome to Twimbit Immersion. Can neobanks overcome the issue of profitability and sustainability? I thank you all for joining me today. I would encourage everyone to use the chat, say hi to each other, and continue using it throughout the session for interactive questions. So let me introduce a stellar group of gentlemen today joining me. I have David, Chief Experience Officer and Co-CEO from TNEX Bank, Vietnam, and Vaibhav Joshi, Global Top 100 CDOs and Top 30 Fintech influencers in India. Thank you, David and Vaibhav, to join in today with us for this provocative question that we have. So neobanks have been in the industry for the last 5 years. They created quite a stir when they started in. They became a disruptive business model, and a lot of fintech players transformed themselves to become a banking player per se and try their hands on core banking services. We also see a strong sentiment when it comes to investors, private equity, or venture capital. We also see that even traditional banks have shown strong influence over neobanks when they are trying to give out their sponsored banking license. However, in the last 3 years, most of the neobanks have faced a shaky road to profitability. Some of them have also experienced unsustainable business models where we've seen a few neobanks shutting down. We've also seen corrections in valuations, and we have also seen a strategy of consolidation in the market. So keeping all of that in mind, today's session is more about deep diving into this aspect. We want to make this session super interactive and insightful for you. So don't hesitate in asking your questions. I'll try to take in as many as possible with these two gentlemen. So to start with, my first question is, what is exactly the path to profitability? And any one of you can start, and then we can move to another.
Okay, Joshi, you want to start?
Sure, David. Thank you. Thanks, Varnika, for the question. I thought this would be your last question. What is the path to profitability?
I want to start with it.
Start with that. So, see, what happens is, before we get into the path to profitability, I think we need to understand what is neobanking all about and what is the buzz that is getting created in the market. Okay. And how is neobanking different from banks? What is it that neobanks are proposing to offer, which is different from a banking proposition? And why is it that consumers are going to neobanks and not going to traditional banks? And then we come to the question of, how neobanks can arrive at the profitability matrix. So in that sequence, if I have to, explain, then yes, I agree with you that neobanking started 5 years back globally. I would talk more from an Indian context, if that's fine. And that's where I've been working. I work in the geography. But having said that, a lot of these neobanks, they, mushroomed because of the inherent need of the consumer to bank through his mobile phone. Okay. Right. Now, a lot of the traditional banks have been trying to carry out digital transformation, have been having dedicated divisions like digital channels, where they create dedicated mobile banking app, internet banking interfacing and stuff, and try to provide those products, in a true digital manner. But the neobanks mushroomed to become a one-shop stop for that holistic banking requirement of the consumer. That is how this concept came in. And that is when the traditional banks started realizing what is it that they were doing wrong. Okay, so hear me out when I say this, that the largest neobank in the country, probably in India today, is not a NeoX, not a Jupiter, not a Fi. Okay, but the largest neobank in the country today is SBI Yono, and the second largest neobank in the country is Kotak 811.
Right.
Okay. Now, if you look at that, they are both traditional banks, but they have actually mastered the art of neobanking and bundling the proposition in a manner that the consumer understands. Who is their consumer? Their target consumer. That is what these neobanks were trying to build the proposition. Now, banks understand what is a profitability matrix. Look at banking products as a whole. Okay. In banking, you have liabilities, you have assets. Okay. And then you have ancillary products like your payments, your insurance, TPP products, so on and so forth. But where do banks make money? Do banks make money on payments? We have seen the UPI bandwagon picking up in the country. Okay. But are banks making money over there? Answer is no. Banks are actually bleeding when it comes to UPI. Okay. It's actually a facilitator kind of a service. And the way we like to call it, it's a foot in the door strategy with the customer. Okay, when I talk about more from a corporate or a wholesale banking perspective, a UPI or a payments is a facilitator or a foot in the door strategy. And we don't make money over there. We make money as banks on the liability products and on the asset products. Now, a whole lot of these neobanks, if you look at their proposition, and this is where I'll probably come close to answering your question, is that a lot of these neobanks are built around the liability side of things, not on the asset side of things. There are now neobanks integrating products which are on the asset side of things, aka digital lending. Okay, so if you look at the retail neobanks on the liability side of things, then we have a digital savings account, we have a digital term deposit, we still don't have a digital true blue current account as we call in India, or a checking account that we have overseas because of the various regulations. Okay, and when you actually digitize that entire journey, right from customer acquisition to account opening, to servicing the customer, to transactions, that entire experience, when you bundle it into an app, that's what a neobank is. Unfortunately, what happens is, and now let me take a step back and give you examples of the day these TPP apps came in, the likes of PhonePe, Google Pay, and the Paytms. Okay, the erstwhile Paytm, not the payments bank Paytm, the earlier version of Paytm. It's a TPP product where it's a facilitator product. You add your bank account and you transact via using that particular app. And that is where this particular neo-banking piece also came into play, that, hey, it's a one-shop stop, do all your banking, and I'm going to give you a value add. Maybe I will give you an investment proposition, investment plus banking. Maybe I'll give you an insurance proposition, insurance plus banking, and it becomes a two-in-one product. And then eventually, you start saving, eventually you buy insurance, eventually you start making payments, and that eventually is where the profitability or the payment lies. Because if you talk about a retail neobank, then the consumer is actually opening an account, he's depositing funds into their account, and he's depositing funds into the account, from an experience perspective, he wants to really experience what's neobanking and how it is different from the banking. Second, that is the convenience part of it. And second is if he can actually leverage that for ease of his day-to-day transactions. Now there, the bank is actually paying interest to the consumer, which means the bank is not able to pay a lot of delta or provide revenue lines to the neobank, which is a partner in India, unlike overseas where they have neobanking licenses. But there too, the neobanks have to pay an interest. Now in banking, we have something known as, a CASA ratio.
Yes.
Current account, savings account ratio. And, when we say the CASA ratio reaches a certain level, banks don't need to borrow money to lend, because lending is where the banks make money. Now, if you look at that neobanking scenario, and if you look at the liability story that the neobanks are carrying out, then you get the answer to your question, Varnika, that the profitability lies when neobanks are going to reach a deposit ratio where they will be able to plug in lending products at a cheaper cost and command a interest which is at a higher rate. And that delta is where, one of the stronger revenue lines will come in. Okay, then there are ancillary products, because at the end of the day, banking is a traditional business, whether you do it in a physical manner, in a digital manner, or you do it in a neo-banking manner. At the end of the day, the products are defined, and you know that these are the products where the money is going to be made. I lend money to you, you are going to pay me interest. That is where I make money. Yeah. You deposit money with me, I'm going to pay you interest. Okay, and that is where I have very minimum, there is a small delta where I'm supposed to make the money. So a very healthy combination, Varnika, of CASA, which is current savings account, TPP products like insurance investments, where a good amount of money can be made, and lending. The day neobanks are able to crack this equation in a holistic manner, that is the path to profitability. I hope I have answered your question to the
No,
best.
that was a very comprehensive discussion. Thank you so much. And what are your thoughts, David, on it?
In my point of view, I think digital banking is that way of thinking that offering just a nice digital version of the banking products, it's about to die in the next few years. I think from a neobank point of view, we have seen, or challenger banks, whatever we're gonna call it, I think we have seen, and we're going through the third evolution. Okay, the first I will mention that the examples like Simple in the US, 2011, moving. It was, a very incredible CX experience, but nothing else. They were relying on a banking partner to build that. We saw from 2013 to 2016 the next evolution, where most of the digital banks, most of the challenger banks, they realized that to be profitable, they need a banking license. Banking, it's a very simple business. We save money for our customers, we lend money, and we make payments. It's a very simple business, and the only way to make money is out of lending. And in that, lending can be from credit cards, from unsecured loan, mortgages, line of credit, overdraft, you name it. That's how you make money. But I believe the future of neobank and profitable will come for embedded banking, and this is why the next generations of neobanks are happening. These super apps, these platforms, those ecosystems. I will put an example in India, Paytm. It's one of the biggest platforms. We see a Grab, acquiring 2 digital banking license. We see the likes of Nubank in Brazil, Rappi from Colombia, expanding in Latin America. We see many other examples that banks need to be with the customers and embedded the banking products on their daily lives. That banks will be, and when I say banks, can be traditional neobanks, whatever. They need to go through a very long journey of how we become a helper of our customers, how we embedded our experience in the daily lives. Making payments, allowing customers to make payment, that's great, but this is not what our customers want. As always said, focus on the second part of the sentence. Customers, they want to save money because next weekend they're gonna go for a trip. They want to invest money because they want the return for the children. They want to make a payment to pay back for the beers last night. And that's the second part of the sentence, what is important for our customers. So those brands that start embedding the banking products into their customers lifestyle experience, it's where they will become valuable, they will become a top of mind brand, and they will become the most profitable, because at the end of the day, it's the ones that are providing value for customers. And we have seen that in many jurisdictions, it's the ones that are becoming more powerful. And most of the digital banks that are around the world are based in Asia. All of them are on the lending side, and all of them, they are providing ecosystem. They have an ecosystem, they have a platform where they embedded, from insurance, travel, trips, bus services, micro investment. They have games, they have e-commerce, they have chat, they have plenty of things. And that's those ones that, they start embedded, banking and not banking products the ones that will become the most relevant for customers. And therefore, the first one that customers will start thinking when they are going to make a payment, are going to save money. And this is why, Starbucks is, on the top 20 banks in the total assets in the US. It's because, it's convenient for American people to, put the money there to pay for the coffee. So those embedded experience, when you pay with your Uber, when you pay for your Grab, you're not thinking about making a payment. You're thinking, I need to go from point A to B, and the banking layer is underneath. It's invisible. You don't need to take care of, and that's invisible for our customers. And that's how customers, it's what they want. They don't make a payment. They don't want to save money. They want, something else, and that's something else what we need to rethink. And that's how the new generation of neobanks or digital banks will become the real ones that become profitable.
I agree. So I have this contradiction in my mind. When neobanks go out, offer products, they go out for service differentiation. They are thinking about getting into the lives of the customers, being embedded into their day-to-day lives, and actually owning customer journeys rather than focusing more on differentiation. Whereas when they're sponsored by a traditional bank, the traditional bank's objective is more from a CASA standpoint, like Vaibhav said, because that is the pressure that is needed for them to, for the neobank to sustain in long term, and get into the lending side of the business faster. So how does that what do you say, symphony is built between the neobank and the traditional bank, where the neobank is actually trying to answer the second half of the question, like you said, David, is trying to solve the real customer pain point. Whereas at the same time, there is a need for sustainability, where we need CASA ratios to be high, the revenue to be consistently flowing, so that you can move into becoming a profitable business.
I guess there is no shortcut here. I mean, like building a brand from scratch, it's a very painful process. Even, the largest digital bank, that will be Nubank, yesterday, 2 days ago, they released the Q1 presentation. They're reaching, 60 million customers. Right. But they started, 9 years ago. It's hard. And, last year they hit break even. It's a long journey, but once you get the product market fit, and you are able to expand your ecosystem, and you start cross-selling, I hate the word, but it's cross-selling, you start getting customers and providing customers all their needs at once, to become the one-stop shop that we always said in banking. That's how you start. Your ratios are going through the roof. I was going through the pack, and you can see, only in the last 12 months, they have added 18 million customers. That's, that scalability, it's unheard of in any traditional banks. But it's, once you have that, all those foundations, it's very easy for a bank to scale, and to expand. And this is what we're seeing, like many other banks, not only in Latin America, but also the likes of as I mentioned before, Kakao, WeChat, Alipay, Grab Financial. We're gonna see a lot of these companies that it's gonna be a very hard a journey through the desert until they get all the products in place, because no matter what, CASA, it's a loss-making business for customers at the very beginning. But once you get into a position where you have investment, you have lending, you have insurance, you have multiple products, that's why you start making every customer profitable. Even when you're reaching, a segment that is, a low margin, but with a huge volume, it's how you make your economics to work. And it's something that it's gonna take time, because building lending products, it's complicated. For most of these neobanks, they are targeting segments that they have zero or minimal data. So it's very hard to do the credit assessment of those customers. As always, you know, it's easy to give money, it's hard to get it back.
Right.
And that's part is that credit risk monitoring, that credit risk management, what it's, you know, the key for banks. And we have seen, you know, what are the banks profitable in the UK? Starting up north, in the Latin America, it's only Nubank, and all the Asian banks that are profitable, all of them, they're offering, you know, some kind of lending product that could be, you know, a credit card and unsecured loans. And that's you know, that is the, you know, the key ingredient for new banks, because most of the new banks were, you know, focusing on targeting a new bunch of customers that are invisible, you know, that traditional banking has ignored, but are massive, you know, in terms of, you know, TNEX, there is 60+ million customers without a bank account in Vietnam. You know, there are hundreds of millions of customers, thanks to, you know, the regulation by the Indian government. You know, there are more of them, you know, becoming, you know, from completely underbanked to be, you know, unbanked, you know, sorry, for being unbanked to be underbanked. And, you know, in the next few years, we're going to see that, you know, most of them, you know, Brazil population, they reduced the unbanked population during the COVID time, 73%. This is how digital banks, you know, you have a branch in your phone. You don't need to go to anywhere. And that's, you know, when, you know, you start collecting different data, and this is, you know, how Ant Financial is doing this 3, 2, 1, you know, you're gonna get in 3 seconds, you know, they're gonna take a decision, and in 0, you're gonna have the money in your bank account without any human interaction. Those are, you know, those are the models that the neobanks that they need to create and they need to develop in order to lend this segment that it's, you know, with minimal or no data. So you need to start building and managing that portfolio and creating, you know, and tweaking all these data points that you're collecting from social media, from telcos, from banking, and from other apps, to make sure that, you know, you can assess the credit worthiness of that customer.
So, Varnika, let me also try to answer that from a slightly different context. All right. So, if you look at from a regulatory standpoint, okay, and coming to your point where, you know, while a bank looks at acquiring a customer from a CASA perspective and owning the customer, a neobank wants to acquire the customer from an experience and then subsequently from a longevity perspective. Right. So, from a very pure Indian context, you know, since we don't have the neobanking licenses, I'll borrow, you know, a couple of words that David mentioned in his previous answer. You know, that was continuous engagement is what neobanks need to do continuously to create that something else, and that something else is what is going to create the revenue lines. Okay, but from a hardcore regulatory standpoint, the neobank in India cannot actually own a customer from a banking perspective. The neobank actually becomes more of a customer acquisition partner, or a DSA, or, you know, a co-brand partner, or a BIN sponsor partner, or a program manager, or a business correspondent. You know, these are all those regulated names, and the customer actually becomes the customer of the bank. Okay, and once the customer becomes the customer of the bank, the customer can actually also go on the banking platform, ignoring the neobank at some point in time and transact. And this is where the neobanking licenses are going to be important in the country. Because if you look at the examples that David has been giving, then the key differentiator between India and those markets are that those entities have got the neobanking licenses, which means they fundamentally own the customer, and ownership of the customer is extremely critical. Okay, who owns the customers? Because at any point in time, when two businesses are working together, there are bound to be certain percentage of issues, especially when it comes to data, when it comes to customer ownership, when it comes to customer profitability, so on and so forth. And that is where that, you know, the ownership cannot be in a gray area. Okay, that I personally feel that is something that the Indian regulator has to look at. Probably providing neobanking licenses, rolling them out in addition to the digital banking units that are getting rolled out. Okay, there needs to be neobanking licenses so that at least those entities who are trying to create a one-stop shop neobanking solution, they are able to service the customer and provide them products from a longevity perspective. Today, what happens is, from a revenue standpoint, a neobank in India can actually provide a CASA, it can provide a lending, it can provide XYZ products. But for every product, it's going to need to have a bank at the back end. And that bank at the back end is going to take a sizable chunk of the revenue that the neobank is making from the customer. And that is what kind of eats into the profitability. Okay. Now the banker inside me would argue that that chunk of profitability or chunk of revenue share is actually from infrastructure, hosting, technology, regulatory compliances perspective, right? Of course, that is correct. But if you look from a neobank's perspective, okay, then that it was actually eats into the revenue lines. Okay, that is what eats into the revenue lines. Now, if India was to look at the West and bring in neobanking licenses, and once that customer ownership puzzle gets solved, then the route to profitability would be 3x to 5x of what it is today, Varnika.
Agreed. I totally agree. Yes. No,
sorry, Varnika. I think that's the future, Joshi. We have seen regulators. We see the UK regulator at the front like 8-9 years ago, and we have seen that set the kind of the pace for many countries to follow. We have seen Hong Kong and Singapore, giving away the virtual banking license. We have seen Malaysia recently announced, the new 5 digital banking license, and it's the way it is. I think most of the regulators, they have understand, especially in many parts of the world where the population of unbanked and underbanked are really high, that the only way to attract and and help them to become part of the banking system is through the digital banking space. The branch model, it worked for a time period of time, but with the access to smartphones, with the access to internet, reaching 18, 19s in most of the countries, the barriers to bank customers are very little. Of course, we're going to have some challenge, but the main challenge is, if we want to grow, we need the regulation in place to make sure that our customers, they feel protected, that the money is protected, because at the end of the day, this is, one of the main assets that they have. And that's the way it is. We have seen that many regulators, and more of them will, gonna start thinking of issuing digital banking license, because it's the way it is. Neobanks, they have a massive advantage, that is compound growth. Their ability to scale up, quickly from 0 to millions in a matter of years. It's something that, traditional banks have needed, 20, 30, 40, 60 years to reach those levels. This is why, the biggest bank in the world all of them are mobile. We bank in China and financial, the new bank, Kakao, has, more customers than most of the traditional Korean banks. And we have seen that, it's a matter of time where those banks, where they're building the pro portfolio, they're gonna take those profitable customers that for the time being, they're still using traditional banks, but traditional banking is dead as it is. Customers, they are no longer going to the branch. It worked until a period of time, but when every one of us, we live our life, we spend between 6 hours and a half every day on internet. What's the point of going to the branch? I do everything. I order the food, I order the car, I renew my insurance. I can chat with my friends all around the world. Why cannot do banking? And that's part where where the new players will become very powerful, because those experiences will be replaced for digital channels, and no matter what country, that trend, it's unstoppable.
I agree. So let me engage the audience a bit. We have a poll for them, so we want to understand from them as well. What do they think about neobanks' paths to profitability? At the same time, while they're answering, let's take up a few questions. So we have a question from Shashank who says, "What are your thoughts on freemium and premium models in neobanks?"
I love that question. I really why? Because one of the things that neobanks have been able to change this, and it's something that most of the traditional banks have a challenge, is they change the way of bringing value or charging fees, and that's that completely way. You pay for the services and the value, and this in this subscription economy that we're living in. You pay only for the services that you value, and the banks, they rejected to value and the services that they provided, and when they charge fee, and it's and most of the fees that they were charged is just to penalize customers for not doing the right thing. And this is how neobanks, they turn that around. It's like, no, we're going to provide all the tools to help you to run your life, to manage your money, to save money, to invest your money in the right way. And that's completely the opposite. Is when you bring the value to customer and say, this is not about free payments. It's about helping with new products and services that will help you to go or to be what you want to be. Because customers, they have a problem because they don't know how to spend their money. They have a problem of, how do I save? And this is why most of the banks, they launched their rounding up, the savings spot. And those are the services. It's not about the savings product. It's about providing the tools to get customers what they want. And I think they see the opportunity, and they were able. And of course, a freemium model or a premium model won't work itself. That will be another revenue stream, but it's a nice way to start thinking of how banks can charge customers for extra services that they provide.
See, adding to what David said, Varnika, it is also important, and Shashank, please note this. If you look at the traditional banks today, the traditional banks are also charging the customers for premium services. Okay, you go for a higher version of a credit card, it's going to have an annual subscription fee. You go for a premium account, it's going to say there needs to be a minimum monthly balance of so and so. Okay, if the balance drops, the bank is going to charge you. If you look at your existing bank account, you will realize if you are in India, then it gives you only certain amount of transactions free. Anything about that on a debit card, on IMPS or any other mode, it's going to charge you. So the freebies are only limited to a certain set. Anything over and above that, you are going to get charged. And the value that neobanks bring is neobanks have that data with them, and basis that data and the intelligence, they build these products and then they push it to the right segment. Okay, the premiumness of the product is not as a blanket offered to everyone. It is only offered to those who the neobanks know are going to be able to afford it, and more than that, they're going to realize the value and use it to its fullest potential. Over to you, Varnika.
Thank you. So there's another add-on question, I believe, from this is, what about the interchange fees and the subscription fees that is charged by neobanks?
I will take that question. So generally what happens is interchange is directly proportionate to the cards that are getting used. So whether it's a prepaid or a debit. Now in India, the debit interchange is capped, fixed. The prepaid and the credit interchange varies depending on the type of the card that there is. And in neobanking, the interchange share do happen between the banks and neobanks. Since the information is slightly sensitive, I'm not going to dwell into what is the interchange share per se, but yes, interchange share is there on the offer when it comes for a neobanking partner to partner with banks. In the case of a neobanking license overseas having its own neobanking license, the entire interchange would belong to the neobank because there would be no bank at the back end. From a subscription fee point of view, now let me again reflect to the earlier question posed by Shashank. Subscription fee is one of the premium services. So a neobank can always say that my base offering is going to be X. If you want a X plus Y, then it's going to be a X subscription fee or a per transaction fee or a per usage fee. If it's going to be X plus Y plus Z, then it's going to be subscription fees type 2s or something like that. So it's more from the premiumness of the product.
Got it. Anything you want to add, David?
I think we have seen, and most of the regulators in the world, they're going into the same direction. Interchange fees are gonna drop to zero. We see UPI is for free, Pix in Brazil is for free. Most of the new real-time transfer that it's being created and developed in the last few years are forcing companies to offer these services for free, and this is about bringing customers in. The question is are data revenue, are they gonna start giving me the right insights? We have seen, and this has been an ongoing comment for many years, it's my salary where I spend the money. Why they don't start bringing those insights and saying, okay, this is the second time you are coming to the restaurant, the next one will be 15% off. And this is how the data will become an asset for banks, and they're gonna start doing something about that. But for interchange fees, will stay for a while, but all of them, it's a race to zero. So it's start thinking of how we're gonna make sense out of data and how we can provide the value from travel. We have seen the Monzos or the Revolut, the minute that you arrive in another country, they offer insurance product. We have seen that you are in Denmark. Do you want, that you can, withdraw money for free the first 200 euros? Do you want to open an insurance product while you're away? These are the behavioral, the personalized experience that customers will be more willing to open, and this is how banks that they need to focus on.
I agree. So I think there's a follow-on question to that, and that's posed by Advait. He says that user experience is one thing, but the money can be also charged by additional services, and that's what our conversation is about. That how payments, investments, and these value-added services or innovation that we're building onto the products, is that a reliable revenue stream apart from lending? You think from a long-term standpoint?
Absolutely. I think and I'm all over customer service, but customer service without a good product, it's irrelevant. So it has to be matched, like a super nice app, but it's not bringing any value because the products are awful. It doesn't bring value to customers. In terms of other revenues, of course, investment products are really very profitable, and we have seen in the last 6 months that most of the neobanks and most of the even traditional banks that are now offering crypto services, how this Robinhood becoming like a massive player in the US set up the trend to offer a wealth management system to allow many customers to start opening investment account, mutual funds, stock, ETF, crypto, we are, and this is how neobanks are becoming profitable, if they build enough revenue streams to become profitable, because the more products you have, the more sticky is the customers. But the stickiness of the customer will become because of the products you have underneath. We have seen that, and I'm gonna go back to the presentation from Nubank. That right now, every time they onboard a customer, they open, in the first month, 3 products. When they launched, they needed 41 months to cross-sell 3 products. For them, it's very easy right now to start, the minute you're gonna have your casa, your checking account, the debit card, the credit card, the investment portfolio, the insurance product, and so on, so on, so on. So of course, there will be more. I don't think the pipes, as I call it, the payments will be a revenue streams, but in terms of investment, insurance product, there are a bunch of, buy now, pay later, that it's, big trending, because it's changing completely the experience. And when I was laughing when Joshi was saying this, is you need to have a minimum balance. Customer, they don't think that way. I will have a minimum balance if I see, the value of it. And most of the customer, they're opening, many different bank accounts with very different neobanks. They wanted to test, what are the services. I'm gonna try with all of you, and then you need to convince me to stay here. They will come for to your shop because of the bonus that you're gonna give them, but they're gonna stay because of the service that you provide, and the broad range of products that you can offer them. And if you match all their needs, and most of the neobanks, they start with the very basic, and that's why they start with with very young customers, because the financial needs are very low. And as they move along with different stages, neobanks are able to being able to give them what they want at the right time and at the right moment. And this is why those revenue streams will be very valuable. That will be this premium, this insurance, this cross-selling insurance from other companies, and many others. Data monetization, gaming, travel. There's gonna be a lot of money into cross-selling from different industries beyond banking.
I totally agree to that. So let's also look at the polls that we got in, and what is the audience thought when it comes to. Okay, so they don't think that they're going to become the primary choice for the customer. So maximum of them think they're still going to be a secondary choice when it comes to banking. A few of them also think that it's going to be a bubble that will burst, which is and consolidate.
Regarding the first question, I read a research from Cornerstone Advisor a couple of days ago, and neobanks are now the primary bank account for Gen Z and millennials in the US. And that's also the case for Brazil and Mexico. And we're gonna see that trend in everywhere. Most of the banks are still focusing on 40 plus years old customers that are the ones that they are profitable right now, where neobanks, they're focusing on these students, even teenagers, that in the next 2-3 years, they're gonna move into a different stage. And they don't gonna look for a traditional bank to open the bank account. They're gonna keep working and keep opening new products with these banks. So it was, very eye-opening to see that, a third of millennials and Gen Z, they now consider neobanks as the primary bank account. It's larger than local and community banks, and that's a massive change that happened in the last 2 years. And I don't see it, but also Revolut the other day they communicated that they have a 220% increase in the baby boomers customer base, we're gonna see, in the same way that we saw our parents and our grandparents, start using Facebook, start using WhatsApp, they're gonna start using neobanks because the UX, it's very simple. They get rid of all these. I have 4 different balance, available balance, ledger balance, end of day balance, that all this banking complexity that most of the customers, they don't care and they shouldn't care, and focus on how are these banks helping me? Are they helping me to save money? Are they helping me to invest my money? Are they helping me to be proactive of what should or shouldn't do at any given time? And that's why most of the banks, they are losing that 2 generations, that's Gen Z and millennials, that for them, traditional banks are not an option, and that trend is gonna increase in the next few years.
So definitely, I think that mindset shift has already happened. Younger generations are the early adopters, but I think the others will also follow. So that brings me to my next question. It's very, and I think it's one of those exciting ones that I always feel, because neobanks are playing on customer experience. And you both coming from digital advocates and experienced leaders. So what do you think are those measures of success that we lead on when it comes to neobanks? What kind of customer experience success measures are neobanks establishing them for themselves to actually say that this is a good benchmark for us to achieve?
See, I'm going to let David answer that question because he's also leading the CX part of it. But I will just spend maybe 30 seconds on this from a pure hardcore business perspective. And the business angle to this is very simple, that the attrition rate of the customer. Second, the engagement rate of the customer in terms of how many times is he coming on, opening. Okay. Third is the transacting rate of the customer. How many times is he transacting? Fourth is the servicing. Okay. A neobank has to give, and I like to call it the Amazon experience. Okay. A neobank has to give an Amazon experience to the customer. Anything and everything has to be bot-based servicing. Okay. You have an issue, it's like a Ola, Uber, Amazon. Click that particular transaction, raise a question mark, click on it. Next to it, there is a bot. Tuck, 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 tuck. 30 seconds, you are out of it. Okay. It's going to take time. Then, you will get a resolution, over in a different manner. So, and then, again, coming to, where you are able to go beyond banking and go beyond looking at, creating revenue lines. So for example, creating a community. On NeoX, we created an amazing, social media community, and majority of the features that we added there were actually, asks that came on the community. So these are some 4 or 5 broader things that I feel are relevant, but over to you, David. You are the subject matter expert on this one.
I think it's a combination of different factors. We have seen a massive increase in the number of neobanks focusing on really niche targets. LGTB, minorities, a very specific gig workers. We have seen, they're really providing services for a niche, and that's kind of what neobanks, they need to have this product market fit, and that will be part of how we turn around products into experiences, and those experiences will be part of as I said before, it's not about offering a term deposit or a savings account. It's how we help customers to save, and how we help customers, you have some money that you're not using in your CASA balance. Do you want me to transfer it into your investment account and get a 5-6% return? Those are those personalized experiences, and I think we are going through a revolution in terms of how we're going to start using data, and how banks are start to offering personalized experience based on past behavior. What are the next best action for that customer? And that comes for another factor that as Joshi was mentioning, that it's going into lifestyle. We need to start developing ecosystem where we provide multiple products, beyond banking, and provide, all the banking products invisible underneath. And those are the key challenge, because how many times do you open your bank account? Once every day, every 2 days, once a week? How many times you open Facebook? How many times you open WhatsApp? How many times you open your food delivery, your Netflix account? And these are, what the real battle will be. I don't think will be between traditional banks and neobanks. Will be banking players coming to other industries, or other industries coming to banking. And we have seen like telco companies, coming to banking, how social media, and we have seen WhatsApp, becoming a big player, offering, payments. Why, Google is going into payments. They are relaunching again Google Play or Google Wallet now. We have seen that, it's either you go out and start building your own ecosystem of products and services, or the other one will be, and that's, what we have seen, especially in Southeast Asia, the rise of the super apps. The apps are offering, food and delivery, pharmacy services, travel, banking, you name it. It's a mass app of different products that from a pure bank point of view will make no sense. And this is, why, it's, you are relevant for customer or you're not.
True. I agree. So actually, that's what our audience thinking again, and with your answers. So we have two more questions in the audience, and I think Rashika points this to Vaibhav, where she says that when you're saying there's an instant need of license framework for Indian neobanks, what can we say about the licensing requirements that may serve as a big challenge in the coming years for most of the new banks? So especially when now we see that India is becoming like a hub for them. We have more than 30 neobanks popping in every direction. So when it comes to having a formal licensing framework and everybody is applying, so I think the road to getting a license would be really tough for them.
So I kind of agree with Rashika over here, because if you look at, just recently, there were some 6 rejections by RBI, right, for Universal Bank and SFB. Just yesterday, the news hit the market. Yesterday it hit the market, right? But if you look at, so yes, the actual licensing requirements for neobanking is an extremely gray area, because we don't even know if that's going to happen or not. Number one, okay. So the path as it stands today in India is that the path is for a fintech to actually partner with a bank and then launch a neobank. Eventually, if it wants to get into lending, then become a NBFC, become a SFB, and then become a universal bank. If it wants to go on the payment side, become a payment bank, and then become a universal bank. That's the path that the regulator says today. Okay, but then let us also do a slight deep dive into why this is the case. Okay, as David was pointing and giving examples of international markets where a lot of unbanked became underbanked. Okay, Brazil and other examples. If you look at India, see, in India, banking has been highly successful compared to the globe, because in the past 2 decades we have seen the success of Jan Dhan Aadhaar Mobile, JAM. And then the entire subsidies moving into Jan Dhan Aadhaar Mobile. Okay, so even before the concept of fintech came into India, we had the concept of a banking correspondent or a business correspondent. We had the SLBC, state level banking committees in place, and every bank actually helped create a no frills bank account even to the last mile villages. So almost every Indian in the country would have a Jan Dhan account, a Jan Dhan bank account. Okay, so he would have a RuPay debit card. He would be able to use it at an ATM. He would have a bank account, and he would access that bank account. If there is no bank branch, he can walk to a retail shop, which is a BC agent outlet of his bank, and he could carry out his banking. So that setup, the way I like to call it, assisted banking, already exists in the country. And that is why, that is one of the core reasons why neobanking in India will first pick up only in urban areas, and it would pick up more from a customer convenience perspective, a differentiated offering, a digital only offering perspective. That's why we see only millennials picking up NeoX, Jupiter, and Phi. Okay, and eventually we will see, use cases for MSMEs, use cases for SMEs, corporates coming into the neobanking sector. Eventually that's going to happen. Okay. But yeah, should the regulator decide that the neobanking licenses are going to be given, in that case I expect a slightly diluted version of what was given out for the payment banks and the small finance bank. A slightly diluted version, because it's going to be a combination of CASA plus lending plus payments on a neobank side. And a few of a reference point for that is the recently released guidelines that came from bank to fintech engagement. RBI released it a few weeks back. If you have a look, then that is where it will give you an idea what sort of an engagement framework is what the regulator is going to look at.
I totally agree. I think that for that we need to wait, because they're still in an experimental phase and they're still inviting discussions. Now that brings us to another question. I think this one is for David, because he talks about CX measures and what success looks like. So another growth strategy what neobanks are looking is converging into super apps, so becoming, and I think we touched upon it as well in this session. But do you think that's a future growth strategy, like becoming, now today everybody wants to become a super app, a telco company wants to become a super app, a traditional bank wants to become a super app, a neobank also. So where do you think the opportunity lies? Because at some point in time, few will survive, the others will have to identify their paths.
Yes, I do. I do believe we have seen, for example, Tinkoff in Russia, they built a super app, and they started with a banking, with a credit card business. We have seen now another example, I put it before, like Rappi in Colombia. They started with with delivery of food. They have now pharmacies. They now offering banking services. We're gonna see converts into either new banks trying to build their ecosystem, also the likes of Starling, that they're building slowly, the Lego pieces to build and to have the foundation to start adding more services. Or we're gonna have other apps that they have managed to scale up to a point where financial services, they take a huge chunk of the revenues in terms of payments charge that the banking or the credit card or the debit card providers are charging them, and becoming and looking for a banking license. This is why we have seen the likes of Google, Facebook, Apple to payments, because they take a massive revenue out of them. And this is why they're partnering with other banks, or they're looking directly for digital banking license. But in terms of super apps, we have seen the likes of all the virtual banks a license that they were giving in Hong Kong, Singapore, and Malaysia. Most of them were given to a consortium of companies that they have retail business, they have banking business, they have hospitality business, they have telco business. It's an amalgamation of different services, and this is why also the regulators, they believe that they have more chance to reach the majority of those customers that are not able to reach, but through their shops, through their drivers. Why you don't get into a Grab and you onboarding into and open a bank account, why you don't go to a pharmacy, and you can open a bank account. And these are, the new formulas that, regulators are looking for. And especially in Asia, we have seen that the regulators are more pro super apps or consortiums or ecosystem of companies that they're gonna bring financial services to, you know, a very broad range of industries.
So,
Agree.
Varnika, quickly, 10 seconds on that point. It's a very, very
Please go ahead.
interesting, you know. So the way I like to give an example is, you know, a super app is like a mall where you can get all the services by different vendors. Okay. Now, if you get into a supermarket, okay, you're going to be able to buy groceries. You're going to be able to buy cosmetics and a lot of various things. The difference between a super app and a superstore is the super app is providing the service by a third party in a white label format. When I say white label, it means it's an API integrated format. And the service is actually belonging to the third party, but the super app is rendering it. So look at super mall as a digital, super app as a digital real estate. And that will clearly answer you. You go to a phone pay or a Google Pay today, you will realize there are so many third party services available. Okay, look at Tata Neu, the way it launched. All the Tata Group services are available within an app. Okay, for neobanks, the banking is going to be the bread and butter for the neobank. A neobank can always offer other services, ancillary services, value-added services to increase its bottom line or have additional revenue sources, but it will never want to compete with a super app. Okay, tomorrow you might get into a food delivery app. Tomorrow you might get into a super app and be able to carry out your banking. But inherently, that will be provided either by a fintech at the back end, a neobank, or a bank at the back end. Okay, only the rendering part is going to happen through that particular interface. While in the case of a neobank, the entire ownership, servicing, everything is the responsibility of neobank. And those are how the final terms are mentioned in the agreements that they sign.
Definitely. I totally agree to that. We're 3 minutes or 4 minutes up, but I think it's such an exciting discussion. I don't want to end it, but keeping the interest of the time, I would really want some closing thoughts in terms of what do you guys see as a long-term strategy for sustainability, both from a neobanking standpoint and overall becoming a banking growth strategy where we see traditional banks, neobanks, fintech, lending, buy now, pay later, service provider, all trying to compete in the same market. So what do you think will be those two things that will drive the long-term impact?
David, you want to go first?
Sure. Two key trends I see is, an obsession about the rethinking the customer experience, and this is why we have seen the buy now pay later and other products rethinking how banking services are provided. And the second I see is the personalization in terms of data. Start giving the right product at the right time, the right message at the right location, and for the right person. And I think that's two key, embedded, lifestyle services and providing this, seamless, personalized experience to customers that they feel that this is the right message for me at this moment.
All right, two very, very crisp things. A, neobanking is here to stay. Neobanking is not going anywhere, and neobanking has already started creating the dent in the market. B, traditional banking, the way we look at it, is poised to change. While I don't agree with the statement that banks are going to become extinct, banks will continue to operate in a hybrid manner where the banks who innovate, somebody like a Yono or a 811, banks who innovate, will continue to challenge the challenger banks and continue to service their customers in a truly digital manner. And banks will also continue to exist in the true hybrid manner while becoming banking service providers at the back end to fintechs and neobanks.
Thank you so much. I think we do have some true sense in terms of what paths to profitability looks like. Alternate revenue streams, having a definite regulatory environment, having a set structure in terms of how you're managing customer journeys, the right measures of success. And what I believe is the future trends, as you say, is going to be around personalization with data, managing customers end to end, becoming embedded into their lives. So I think keeping all of that in mind, like Vaibhav said, neobanks are here to stay. So we will continue keep having these kind of discussions in the future as well. Thank you so much, David and Vaibhav, for this lovely session. It was super insightful. I got to learn a lot today, and I hope the audience as well did. We look forward to having you again on another topic, another deep dive session. So thank you, and thank you everybody else also as audience to join in and giving these wonderful questions for us to answer.
Thank you, Varnika. Thank you for letting us join the panel.
Thank you.
Thank you, Varnika. Thank you, David. Thank you, Twimbit. Thank you, audience.